If you opened a modern economics textbook, you'd think global finance was invented by governments, crafted by legislation, regulated by central banks, and perfected by economists with neat charts and tidy theories. But that's the fairy tale. The real history is older, stranger, and far more human, because long before nations controlled money, networks did. Private alliances, merchant diasporas, religious orders, trading guilds, family dynasties, underground webs of trust that stretched across continents centuries before governments even understood what they were. The first global financial system didn't run on laws, it ran on loyalty, it ran on relationships, and very often, it ran in the shadows. Welcome to Financial Timeline, where money, power, and history collide. And nothing is ever as simple as it looks. To understand why these networks existed, you need to imagine a world before stability. Before central banks, before stock markets, before deposit insurance, a world where your coins changed value whenever a king shaved metal. Trade routes were ruled by pirates. Borders were ruled by warlords. Officials could take your cargo with a smile, and sending money across a border required a miracle. This wasn't a financial system. It was financial anarchy. And in that chaos, one truth shaped everything. Identity was more reliable than law. If you were part of a community with shared language, rituals, and obligations, your wealth could travel across thousands of miles. If you weren't, you were on your own. This is why the first global financial system wasn't built by nations. It was built by networks. One of the earliest of these networks was the Jewish merchant diaspora, later joined by Sephardic and Ashkenazi networks. They were multilingual, mobile, deeply connected across Europe, North Africa, and the Middle East, where Christians and Muslims could not trade across religious boundaries. Jewish merchants could and did. Their cousins carried letters across continents. Their partners kept credit books nobody else could read. Their trust was stronger than the laws of kings. They created the first reliable international credit system, not through institutions, but through loyalty. Meanwhile, in the Mediterranean, two city-states were inventing modern finance centuries before globalization existed. Venice, the city that created maritime insurance, early joint ventures, and intelligence networks based on shipping logs. Genoa, the city whose bankers funded Spain's empire and traded risk like early hedge funds. Their agents, fleets, and coded letters formed a synchronized machine that moved money across oceans long before modern markets. Venice wasn't just a city, it was a financial software system running on merchant trust. Further north, another network emerged, but this one looked less like a family and more like a corporation. The Hanseatic League, a federation of merchant cities from Lubeck to Riga, controlled northern European trade for centuries. They standardized contracts and forced monopolies, with fleets regulated weights, measures, and credit, negotiated like a single giant company. They proved that coordinated networks could outperform entire kingdoms. In the East, another diaspora was quietly mastering long-distance finance, the Armenian merchants of New Julfa. Their network stretched from Amsterdam to Bengal and Isfahan to Manila. They moved silk, silver, spices, and credit across hostile borders, using nothing but trust and multilingual letters. European traders often trusted Armenian merchants more than their own governments. But one of the most dramatic financial networks came from the unlikeliest place. Warrior monks, the Knights Templar, founded to protect Christian pilgrims. They soon discovered something more powerful than weapons. Finance. They built secure compounds across Europe, accepted deposits, issued coded letters of credit, and created the medieval version of the wire transfer. As their wealth grew, so did their danger. And in 1307, the King of France, drowning in debt, destroyed the order and seized their assets. But their financial system survived, absorbed into later networks that shaped Europe. By the late Middle Ages, financial power had moved to families, to Bardi, to Peruzzi, to Medici, to Fuggers, These families built branch networks across capitals, invented modern accounting, moved money faster than royal messengers financed kings and popes, and even decided who became emperor. They weren't armies, they were the software of power. Finance isn't just money, it's information, and no one controlled information better than the Jesuit order. They built schools, missions, and scientific outposts across 3 continents, mapping trade routes and advising kings. Meanwhile, the Freemasons created private spaces where merchants, bankers, and scientists shared intelligence and coordinated influence beyond the reach of governments. For elites, a Masonic handshake was more reliable than any legal contract. And then came the family that perfected everything learned before. The Rothschilds, by placing each brother in a different European capital and connecting them with the fastest private courier network in Europe, they built a synchronized, multi-city banking machine. Faster than royal couriers, faster than armies, faster than newspapers. They didn't just handle money, they handled information, and information decides markets. They weren't the beginning of global finance. They were the final expression of a world where private networks ruled it. Because after them, governments finally began catching up. On the surface, today looks regulated. Central banks, stock exchanges, banking laws, monetary policy, but beneath that polished surface, the old machinery is still there. Shadow banking, trillions outside regulation, looks like Venetian and Genoese finance. Eurodollar markets mirror the cross-border webs of old merchant diasporas. Offshore banking runs on trust and secrecy the Templars would recognize. Private equity and venture capital networks are the new Masonic law. Global intelligence networks and multinational institutions are the new Jesuit orders. The architecture changed. The function didn't. Behind every crisis, minus 2008, the Eurozone collapse, the Asian crisis, it wasn't laws that restored order, it was networks. The back-channel calls, emergency credit lines, and quiet negotiations between people who trust each other more than they trust the system. Global finance was born in the shadows, and even now, centuries later, the shadows still shape it. Every public institution sits on a foundation of private networks. Every crisis reveals who truly has access and who doesn't. The more complex the world becomes, the more valuable trust becomes. And trust still moves through networks, long before it reaches institutions. If this changed the way you see global finance, hit subscribe. History has the answers. And I'll show you where to look.